Traders brush off the big headlines and go back to basics. In today's cover story, for the love of the game, golf fanatics who are writing off a day on the course. Plus, how wearable tech could lead to a cure for Parkinson's. And in Traders Unplugged, are the guys applauding bad behavior? First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Friday, August 15th. In today's First Look, shake it off. Stocks headed upward Thursday as traders and investors decided to buy rather than worry about the Fed or geopolitical events. The Dow rallied 62 points, the Nasdaq 19, the S&P 8. Gold turned down by $1 and oil plummeted $2.28. Coke buys a $2 billion stake in Monster Beverage. Investors guzzled Monster stock after the close on that news, sending shares 22% higher. In earnings after the bell, JCPenney shares rose 5% as the retailer turned in less of a loss than anticipated. Applied Materials stock gained nearly 2% on a profit jump. And Motorola is calling on reporters to attend a mystery event September 4th. There's speculation the tech company may unveil a smartwatch. In Trader Talk this morning, Daniel Stesich of Athena Advisors is with us. And how do you think the Friday trade will shape up today? What will be on the minds of traders?
You know, once again, I think it's going to be the situation going on in the Ukraine, and I'm surprised it hasn't had a more negative effect on the market than it has. So we'll have to see how that develops. Economically, we saw some weakness in Europe, which also didn't come through into the markets yesterday. So we're going to have to see what that does. Going into a weekend, oftentimes with uncertainty, you see it come off. Will it come off this time? I'm not so sure. We've had a nice rally the past few days, so I wouldn't be surprised. But one way or the other right now, not much is going to surprise me.
The Dow was flying higher yesterday, and most of it on the back of Boeing. What's going on with this Boeing binge?
Well, you know, Boeing has had a really decent quarter. I don't say quarter, but the last month or so, you've had a lot of good headlines about orders, aircraft orders increase in form. I think they had another reasonable news announcement yesterday, put it up a little bit. So going forward, that's a well-run company, and if they're getting orders into there, that's what's going to prop that price up.
Oil, on the other hand, had a big slide. How much further will we go?
Well, you know, this is, again, interesting with what's going on in Ukraine, that oil is still able to go down. Now, on a supply-demand basis, I think we've talked about this before. Oil is well supplied, demand is low, so it's probably where it should be and heading the right way. But if you see any type of escalation of what's going on in Ukraine, you're going to see that jump up again. I hope that doesn't happen, and I think you'll see sub 90 if it doesn't. But until then, we're just going to have to keep our fingers crossed.
Daniel, thank you, and have a great weekend.
Thank you.
Chuck Coppola is standing by with more on the market. Good morning, Chuck.
Good morning, Angie. Russian President Vladimir Putin is a market mover. Stocks rallied yesterday as Putin told Russia's parliament that it will do everything to make sure the conflict with Ukraine is ended as soon as possible. Also, Putin has sent a convoy of aid toward the border of Ukraine. Western leaders remain skeptical, though, about Russia's intent and expect it could signal a first step of a Russian invasion of Ukraine. At the same time, economic data out of Germany, Europe's largest economy, shrank 0.2% last quarter, while France had no growth.
The nation's largest retailer is struggling with slow sales. Walmart's earnings came in at $1.21 per share, flat compared to last year and in line with expectations. Store traffic fell for the 7th quarter in a row. Profits at its neighborhood market stores grew 5.6%, but many of those stores are located in the same areas as Walmart mega stores. Walmart's core customers are taking longer to recover from the recession.
I think that the tale is still to be told. Having said that, we can't continue in an environment with so much uncertainty and so across so many dimensions and expect the consumer to be excited to shop.
Walmart lowered its outlook for the year. Analysts believe that competition from dollar stores could hurt the retailer going forward.
The General Motors executive says brace for a massive transformation. After a string of high-profile recalls, GM's product chief says that the automaker is reinventing itself with new employees and new models. It says the new Chevy Colorado and GMC Canyon pickup trucks are coming out later this year. An array of issues has forced GM to recall 26 million vehicles.
McDonald's is trying Fruit Appeal. The burger chain is offering Cuties Clementines and Happy Meals. Junior bananas are also being tested, according to USA Today. The Golden Arch Company has come under pressure from health advocates and lawmakers to serve healthier food.
Shares of Berkshire Hathaway are flying high. On Thursday, Class A shares jumped above $200,000 for the first time. The stock has never been split and is the most expensive in the U.S. Berkshire's owner, Warren Buffett, is the third wealthiest person in the world.
Average investors are failing to follow the golden rule of buy low and sell high. According to analysts of one of the most bullish firms on Wall Street, smaller investors have been lagging the pros during the past 20 years. Analysts with Richard Bernstein Advisors tell MarketWatch investors have poor timing, are buying overvalued assets and selling assets that are undervalued, and run from the market when it becomes volatile. Recent data shows investors have cut their exposure to the stock market now for 13 weeks in a row.
Subprime loans are fueling lending in the auto market. The Federal Reserve Bank of New York says auto loans surged to an 8-year high this spring to $101 billion. That's as more banks lend to borrowers with bad credit. It's becoming a larger concern at the Fed as subprime loans are likely to default, which could lead to a larger impact on banks and consumers.
General Electric confirms it's considering selling its famous appliance division. The company wants to focus on selling industrial equipment, which it considers more profitable than washers and dryers. A GE spokesman says GE is evaluating a wide range of strategic options for our appliance business, including discussions with Electrolux and other interested parties. GE plans to sell $4 billion worth of its businesses this year.
A spike in coffee costs is leading Keurig Green Mountain to hike prices. Keurig plans for a 9% increase in November. It affects portion packs, bagged, and bulk coffee. Cocoa and coffee prices have surged after a fungus damaged crops in Central America. Keurig also blames the price increase on higher costs for packaged materials, energy, and transportation.
Baristas who grind it out at Starbucks are in for better schedules. The company is responding to a New York Times report about the life of a young mother working unpredictable shifts determined by scheduling software. A senior executive now says the software will be upgraded and employees will no longer have to work closing shifts followed by opening shifts. Some employees will be relocated to cafes closer to where they live.
Morgan Stanley is paying back employees who claim that they were cheated out of overtime pay. The bank will shell out more than $4 million or $10,000 each, in addition to individual settlement amounts, in a class action suit for more than 8,000 employees. The employees claim violations of the Federal Fair Labor Standards Act and New York state labor laws.
People in the healthcare industry tend to be at the top of the salary chain. According to CareerCast, the best paid workers are surgeons with a median salary of $233,000 per year. General practice physicians are next at $187,000, followed by psychiatrists at $178,000. Orthodontists come in around $149,000 and dentists at $146,000. Also on the list, petroleum engineers, air traffic controllers, pharmacists, podiatrists, and attorneys.
In today's cover story, golf may be a game with do-overs called mulligans and gimmies on putts that nearly make it into the cup, but it's also a game made for tax breaks. That's if you account for them properly. For years, a lot of business deals have begun or have closed on a golf course.
I bet you I get 2-3% of my deals just by talking to people on golf courses.
So it's worth it.
Yeah, for me it is, yeah.
In my days in architecture, when I had my own firm, the very biggest deal I ever did, I did on a golf course, and it was a headquarters for Kemper Insurance.
Despite these success stories, Sandy Botkin, an attorney who's written books and lectures on lowering individuals' taxes, says a lot of business people fail to take advantage of the green before them.
I do seminars all over the country, and I ask how many got a letter from their accountant saying that they can write off their golf and their movies and their plays and things like that. I don't think I get more than 2 in 100 raising their hands.
For the most part, golf's tax break for business follows the 50% rule. If you buy a round for you and your client, you can deduct half that cost, not the entire amount. But if it's a charity event, Botkin says you can deduct all of it.
And the key is to have a tax tracker and to write down who, what, when, where, why, and how much, and you'll make your life a lot less taxing.
There are other deductions possible for equipment, including depreciation of your golf clubs.
When you buy golf clubs, if it's used for business, you can depreciate them generally over either 7 years, or you can elect to write off the business use of the golf clubs in the year you buy it up to $25,000. That's the limit this year.
I didn't know anything about depreciating my clubs. That's a new one. Thank you.
Not everything may be claimed. Country club fees for your guests may not be deducted, nor can your membership. For more information, though, you may check this website, taxreductioninstitute.com.
The economic calendar tees off today with the PPI numbers. That's Producer Price Index, a look at inflation, industrial production, capacity utilization, and the Michigan Sentiment number. On the earnings calendar, it's Estee Lauder. Still to come in Traders Unplugged, bank behavior so bad, traders think it's good. Plus, how Intel's technology will play a role in fighting Parkinson's disease. And Tesla just notched its 4th record close in a row. Is it time to stop and sell?
You're watching First Business, your source for financial news, analysis, and today's investment ideas. Coming to you daily from Chicago, the financial heartland of America, First Business offers a preview of the day's market action, trends in money, and timely consumer news. Don't be left behind. Get your daily dose of the leading financial news stories every morning. It's your money. Watch where it goes. Watch First Business.
The sudden passing of Robin Williams this week is stirring attention to Parkinson's disease. The wife of the late actor reveals Williams was in the early stages of Parkinson's. Bill Mahler joins us now with how a tech company is chipping in to find a cure.
Technology seems to be advancing at ever faster paces, and with things like Google Glass and that Fitbit health monitor, wearable devices now apparently are in ascendancy. Not only on the consumer product side, there are all kinds of wearable machines in the healthcare sector. Let's talk with Diane Bryant. She's Senior Vice President and General Manager of the Data Center Group at chipmaker Intel. Diane, you're working with the Michael J. Fox Foundation on these devices to help physicians better understand the progress in treatment of Parkinson's disease.
Yeah, that's right. The big data analytics is the next big industry disruptor, and we saw a wonderful opportunity of applying big data analytics to the healthcare industry. And what a better partner than the Michael J. Fox Foundation in applying those solutions to better insights on Parkinson's disease.
Okay, as you get all this data coming in, what do you expect to learn?
Well, many things. We're starting now. We just completed our first trial where we have demonstrated the wearable devices, the sensors, can actually collect data on the patient 24/7, data that reflects their gait, their sleeping patterns, reflects the tremors. We collect all that data and aggregate it with other anonymized data from other patients. And from that, then the researchers of Parkinson's disease can apply algorithms and look for correlations in the data.
Sounds like heady stuff. So this, I don't want to call it a contraption, but the device that the patients actually wear, this goes on for weeks on end?
Well, the trial that we conducted was on 24 patients, and we collected the data 24/7 for 3 days. So that's 2.4 thousand hours worth of data. Ideally, yes, the patient would wear the wearable device. It would be a small wearable device, nothing too obtrusive. Their own smartphone is the device that then is used as the gateway between that wearable device up into the cloud big data analytics platform.
Well, Diane Bryant from Intel, thank you so much.
Thank you.
Coming up, one trader is using Buffett-style investing to make profits on high-flying stocks. And we have the guys counting calories in Traders Unplugged after the break. In a world where time is money, every Friday, Alan Nuckman and Scott Shellady duke it out in Traders Unplugged over who has the best profit-making plan. Good morning, guys. Round number one, fines. Banks shelled out $128 billion in fines for bad behavior. Is it good to own companies that pay penalties?
My answer is yes. If you ain't cheating, you ain't trying. This is a who's who of banking stocks. It's my opportunity to talk about XLF. XLF has more upside. The banking sector is doing very, very well. But look at this list. JP Morgan, Citibank, Bank of America, Wells Fargo. Yes, they're buys. It's only $128 billion.
So when
When you're nervous, and you don't know what you're talking about, you talk like that. The first thing the thing we should not be buying is the government, because the government just gave them the money to find them to get it back. I mean, it's one of the most ridiculous things out there is the money that the government has given those banks. They have now gone back around their backs and find them to get a lot of it back. I think it's scandalous, but the two banks I do like out of that are number one, Wells Fargo, and number two, JP Morgan.
Round number 2, caught by the shorts. Which high short interest stocks do you play now? JD.com, JCP, Cree, Aspen Technology, or CNA?
I'm going to go with JCPenney. I think a lot of the negative news is they've just been beaten up. I know it's actually starting to trade better already, but I think that that's a good stock because I think that even if the news is negative, it's going to be, oh, I told you so, and I don't think you get hurt too bad. I think that's a good one to be long.
Well, you know what I'm going to say here. It's very hard to short the market, obviously.
We get this
bounce,
yeah.
And if the market makes a full V recovery, we back to the highs in the S&P, we're going another 7% higher than we are now. So my lesson here is to short stocks. There's money to be made, but use puts instead of using the stock itself.
Round number 3, retail reality. In 2007, retail peaked months before the S&P. Is this a sign?
I think people are getting wound up about retail, but you got to realize that the country has become homogeneous now. We have all the same stores in every city, and competition is fierce. That's the problem.
Yeah, we have Baby Gap, we can clearly see in every city, especially Chicago.
Corner.
But I'll say this, is that, yes, we have something to be worried about here, because if the consumer does not come back to rescue this economy, who's going to? It can't be China this time around. I'm very concerned about it. So keep watching those consumer stocks, because ultimately, look, we need everybody to empty their pockets on this one, and I don't think that's going to happen. The 10-year's telling us we got something to worry about. Keep an eye on that as well.
XRT is the ETF that tracks retail, and it's at the midpoint of the last 6 months and holding 84. So that's a strong sign.
Because the stock market's high, everything's okay. Go
That's
spend.
a strong sign.
Because the stock market's high, the world's all right.
Well, here's your bonus round question. Which fast food restaurant is slimming down on so-called diet fries?
Burger King, duh.
Yeah, Burger King, they lost. They debuted them a year ago.
Well, that is the answer. Burger King is limiting sales of Satis fries, but here's your extra bonus round. How many calories are in a small order?
Not enough.
I finally got you. It's 190 calories, guys.
That's the best thing you've ever said.
Thanks for being on the show. First Business continues right after this. Tesla and Netflix have been just two of the hot momentum names in this market. Joining us now, Tim Bigham of Trading Block. Good morning and happy Friday, Tim.
Happy Friday, Angie.
Let's start with Tesla. What do you do with a stock like this? Had a new high this week. What do you do if you want to maybe make some money on it, take some profits here?
Yeah, absolutely. In fact, that's what I'm looking to do. The stock, as you alluded to, made a new all-time high, subsequently pulled back off that high. So that kind of price action to me, and especially given the fact it's had about a 13% run over the past 7 trading days, I think, maybe a little caution may be warranted. So fortunate enough to be long a name like Tesla, maybe take a little off the table and be rejoicing that you're able to sell at the all-time high. Whether it goes higher or not, you still have some left.
Right. Especially for those people who bought Tesla when it was down around $88 or so. What about Netflix? This is another high flyer.
Yeah, absolutely the same kind of idea there. I mean, Netflix, was trading, down around $420 a little over a week ago, now trading again about 8 to 10% higher. So in this kind of market environment where we see a lot of volatility will let you trim out of some gains, and then if you want to reposition on a dip, maybe buy back in. But I think given the fact that these are both at or near all-time highs, taking a little off the table, certainly not a bad idea. For someone cautious like me especially, that's what I would do.
And for people who don't own Tesla or Netflix and they're holding a stock forever and a day, should they follow that same strategy, Tim?
You want to obviously consult with your tax guy, see the cost basis and, financial advisor on all that stuff. But, I'm always a big fan, and it's been proven over time, selling into rallies and buying into dips. The old Warren Buffett, sell when others are greedy, buy when others are fearful, over the long haul has been a proven money winner. And in this case, I think, a little caution warranted, and it doesn't hurt too bad to be taking some nice profits off the table at or near all-time highs.
Thank you, Tim.
Thank you, Angie.
Coming up on Monday, a few new lessons on how to spend less on school supplies this year. Thank you for watching today. From all of us at First Business, enjoy your weekend.